Hi, everyone. Welcome to yet another episode of Yala's Bitcoin Liquidity series. As you hopefully know by now, the series is an informative but casual interview series where we sit down with some of the most exciting projects and builders across the Bitcoin, DeFi, and RWA space. So today we're pleased to be joined by Centrifuge and their CTO, Jeroen. For those of you who don't know, and that I'm sure Jeroen will tell us a lot more about, Centrifuge is a kind of comprehensive all-in-one platform for RWAs, which encompasses everything from the tokenization to the management to the investment and the yield side. I guess that was a very brief introduction to Centrifuge. So Jeroen, if you wouldn't mind, take it away and give us a short introduction to yourself and to Centrifuge.
Yeah, absolutely. I mean, I think that was a great kickoff, and thanks for that. And well, first off, thank you so much for having me. I think it's really exciting that we're going to be able to kind of see how we can combine what Bitcoin is doing and is enabling with what we're doing on the tokenization RWA side. So I think there's a lot of potential there. So it's interesting that we get a chance to work together and a chance now to talk about what that all means. So yeah, excited to be here. In terms of Centrifuge, so. Yeah, I'm the CTO here. We've been around for quite a long time in crypto years, at least. We basically were co-founded in 2017, and we went live with our first product for RWAs on 2019. So it was a very different time in crypto. DeFi was just starting, Maker was just launched, and back then RWAs was a term that we had coined that didn't really exist yet, and people were really spending a lot of time trying to explain why it made sense to connect crypto and the blockchain technology to the real world and all these assets that are out there. Um, Fast forward now, it's basically 6 years, and it's a very different market, very different landscape, and that's really cool to see all the evolution there. Um, we're now in a market where um, RWAs play a major role in DeFi. Major institutions are coming on board to participate directly on chain, and the every DeFi and crypto holder can basically get exposure to yield from RWAs, which is everything together is really exciting. What we're focused on is building the technical infrastructure as well as the ecosystem for tokenizing and also managing RWAs directly on chain. We can talk much more about what that means, but basically our goal is kind of offering the product that enables institutions and other partners to create a token and an on-chain representation of an RWA and then use that token in DeFi and in different financial markets on-chain.
Okay, got it. Yeah, yeah, it's very interesting to hear that you were founded so early. It was probably before most people in the space had heard about RWAs or had, I guess, envisioned what it would become. But I guess in line with that, let's take it a step back and have you explain what an RWA is? What is versus a real world asset? What does that mean, I guess, in practical and technical terms? And why is it something that both listeners here and institutions are so excited about?
Yeah, absolutely. I mean, like technically RWA just stands for real world asset. What's really interesting, right, is really what this is referring to, in my opinion, is the merging of the crypto world with the wider financial system and basically combining the best of those worlds. So right now, if you're a crypto holder, you can kind of, or at least a few years ago, you could basically buy, like you could hold ETH, you could hold Bitcoin, you could hold all these kind of crypto native assets. But you wouldn't really have access to any of the existing assets that are already out there in the current financial system. Um, that's not great because there is a lot of learnings, a lot of expertise in that system already. And really, what we're trying to do is to combine those two worlds. So practically, right now, most RWAs that we see are pretty simple financial assets. Most common is basically a token that represents a different U.S. Treasury bills. That's basically simple debt products from the U.S. government, gives you a pretty safe, currently like 4% yield, and it would be considered in the traditional financial markets a risk-free product, meaning you're basically guaranteed to get that rate and you're guaranteed to kind of keep accruing that yield on your money. And that level of risk is really different from what has been in crypto so far. And that's really, really interesting to combine, right? So you've seen different DeFi protocols basically integrating those real world assets into their ecosystem to ultimately create a better product for their users. From stablecoins backing their collateral using T-bills to lending protocols integrating it for leverage and so on, to the partnership with Yala that we're talking about today. So that's kind of how we see RWAs and its integration into DeFi.
Okay, got it. That makes sense. So yeah, let's go back to Centrifuge for a little bit. Can you talk about I guess what makes Centrifuge unique? I imagine in a few years ago, in 2017, when you first launched, there weren't a lot of other players in the RWA sector. How has that kind of evolved, and what position is Centrifuge taking that's unique, or yeah, makes Centrifuge as exciting as it is?
Yeah, absolutely. So right, like 2017, 2019, everything in DeFi was like directly on Ethereum mainnet, and that's where we saw a lot of the early innovation. Um, and then as that evolved, we started to see all these other networks and blockchains pop up with their specific use case. You obviously saw a lot of innovation on top of Bitcoin. There was a lot of innovation on top of Ethereum. There's a lot of alternative L1s that are kind of started to grow. And so the thesis that we started to take is basically, if you're an institution, if you're an asset manager or someone that kind of creates real world assets, um, ultimately the number one thing that you're looking for is yield and distribution. And so that what we're basically doing, and I think we're very different from most of our the other players in the market, so we're very focused on building out this what we kind of calling the first chain abstraction protocol for tokenization. What that means in practice is we're basically deploying our protocol on all these different networks, all these different chains, and then we're allowing the institutions that are building on top of Centrifuge to directly access all those different markets and basically aggregate that from a single place. Meaning they don't need to manage their gas tokens, their RPC endpoints, all of the kind of complexity of crypto on each chain separately. They only manage it from one place, from one chain that they choose, and get access to the entire market. And that's really huge for onboarding institutions into this space and kind of taking it to the next level.
Okay, and is that so? This chain abstraction is what you refer to as a distribution, or could you talk a bit about what you meant by distribution?
So what I
I
mean by
guess it's
distribution is the fact
accessibility
that,
to an extent, or
yeah, right. So like what I mean by chain abstraction is the fact that an institution can basically interact with one blockchain and the protocol abstracts away the complexity and the distribution to all these other networks and all these other blockchains. So any investor on any chain can directly buy any token issued on any other chain. And the institution is only managing one blockchain and everything else is abstracted away.
okay, interesting. How does this work on a technical level? Not too technical, of course. I imagine it's incredibly complex. This is through seamless integration with every, I guess, what can you say, advanced chain or ecosystem, or do you have another mechanism for this?
Basically, yeah. So I mean, our goal is to basically launch Centrifuge on every single blockchain that has an appetite for real world assets. We're partnering with different interoperability providers for that. Primarily number one with Wormhole today as our as we've considered kind of the best choice for going multi-chain. And we're then integrating all these different products on all these different chains. So really, technically, looks like building a protocol that supports all of the different chains, and then abstracting away the complexity of that, and then building a good user experience on top of that.
Okay, interesting. Also, I guess still related to V3 and the chain abstraction protocol design. You mentioned in previous blog posts that V3 is kind of the culmination of a lot of research and experience across other projects like MakerDAO, Aave, and BlockTower. Can you talk a bit about, I guess, these lessons and what kind of experiences have come together to create Centrifuge V3?
Yeah, absolutely. I mean, I think the biggest lesson I've taken is that the reason DeFi and the reason crypto works is ultimately because of open standards that the entire market is kind of rallying around, right? So the reason you see all of the success for assets in DeFi is mostly the ERC20 standards, or like the related standards, like the SPL standard on Solana or different standards on other networks. And so without standardization, the system doesn't really work. And so for RWAs, until a few years ago, there wasn't really any standard for this. Existing standards didn't really work, and you couldn't really integrate RWAs very seamlessly into these markets. And so we worked together with a bunch of other kind of leading protocols to develop this new standard called ERC 7540. That's technically called the asynchronous tokenized vault standards. And it's really an extension of ERC 4626, which is the vault standard that already has 14 billion in TVL across DeFi. And so it really enables RWAs to be more natively integrated into these other protocols and other systems and other products. And that creates this kind of money Legos and this kind of additional value that's being created by combining all these different products. And so that's something that's very core to what we're trying to do, is to ultimately open up these markets and kind of collaborate with everybody across the space, which is only possible because of the standards. I think that's been by far the biggest lesson that we've learned and kind of idea that we've pushed forward.
Okay, interesting. And is this asset then what drives, or the standard, is that what drives the, what pushes forward the chain abstraction, I guess, mechanism? So speaking to someone non-technical like myself, like how does, yeah, what kind of benefits does this bring?
Yeah, I mean, I can technically nerd out for over this for quite a while, but
Yeah, I
kind
can
of
imagine.
to keep it relatively short, right? Like it's actually kind of interesting that real world assets and multi-chain are very similar in the problem, because when you're trying to buy real world assets, it doesn't happen like in 1 second, right? Like different from like trying to buy Bitcoin or ETH or something like that. Like you buy it in 1 second and you just hold it in your wallet. That's not the case with real world assets. Like if you're investing in T-bills, someone needs to go out and basically buy these treasury bills directly off chain. So there's a lag, there's some time that this takes. And that's very similar with multi-chain, because if you're bridging from one network to the other network, at least if you want to do it securely, there's going to be some time that this takes, because you technically need to wait for finality. And so actually those problems are very similar, but both are what you would describe as asynchronous problems. And so that's what is basically ERC 7540 is. It's solving for this time lag, this asynchronicity. And so that's where actually ERC 7540 is both perfectly suited for RWAs as well as for any kind of natively multi-chain products. So we really see this as a standard also for other more crypto native but still multi-chain products. I think that could leverage it very well.
Okay, got it. That makes sense. Yeah, we'll try to keep it as non-technical to, I guess, save both myself and the listeners from more confusion. But thanks a lot for expanding on that. So I guess Centrifuge is mainly an institutional platform, quote unquote. Yeah, that's correct in that. Are you building any, I guess, tools or sub protocols that are targeting retail users, or like what is the growth mission behind Centrifuge?
Yeah, absolutely right. So I think there's a few things going on there. So one is, as we've already talked about, like we're trying to open up like increase the distribution, which basically means like opening access to these tokens on more networks and more protocols. That's definitely number one. And ultimately, like there is a retail element to that already, right? Like because, for example, in the partnership with Yala, right, like we're ultimately creating or providing access to yield from tokenized assets to Yala holders. So I would say that's kind of an indirect benefit for more retail token holders. Um, we are looking at also kind of more directly opening up the tokens itself. And we have actually an exciting partnership, exciting announcement coming for that in the next few weeks. So maybe if you follow Centrifuge on X, you'll definitely see that. And then the other thing is like we're really trying to build the platform to be as open as possible. And the way we eventually see this is that really we want to build this kind of open platform where anyone can go and tokenize their assets. Today, it's pretty restricted to kind of institutions that we directly partner with, But we see the vision for V3 as basically something anyone can use to tokenize their assets. And I think that's something we're working towards by the end of this year, basically.
Okay, got it. Yeah. What do you see personally as the most exciting, I guess, trends or assets to be tokenized? I guess, as you mentioned, we're seeing T-bills, we're seeing stocks to an extent. I'm not sure if you can put stable coins in the RWA category, but I guess depending on how loose your definition is, it's an RWA as well. Like, what do you see as the most exciting asset classes that have been tokenized and that could be tokenized?
Yeah, I think there's kind of right. I would put like two categories for this. I think the first category is ultimately providing access to interesting assets for crypto holders. And so there, I
Mhm.
really think what's interesting is some of these very relatively safe assets and very liquid assets that are already existing in traditional markets and bringing those into crypto. So T-bills is clearly the best example there, but that's pretty boring to be fair. And so what's really interesting is having more assets on kind of the fixed income space, right? So assets that have kind of a fixed interest rate, pretty predictable risk, and relatively high liquidity in the billions in traditional markets. I think is really interesting because we can create yields in the order of magnitude of like 6 to 10% APY for any kind of as collateral for stablecoins, as collateral for lending protocols, and I think that is where we're going to see a lot of movement in the space in the next 6 months. Beyond that, I think personally what is most exciting is really trying to look towards the future and see where can blockchain provide the most benefits. And this is really where like the roots of Centrifuge come in, where we've always tried to go beyond just creating a token and really try to bring the entire process of managing assets on chain. And so I think, for example, looking towards the private credit space, where there's a lot of inefficiencies and a lot of overhead in the way these are traditionally run in off chain, and using blockchain as basically this automation and efficiency layer can basically make them more efficient and ultimately more accessible. I think that's something that it's going to take a little bit longer to be really fair. Like, genuinely, like with RWAs, we're at, what is it? If you don't count stablecoins, we're at like 5 billion total TVL, which is really not that
Mhm.
much if you look at, well, financial assets as an asset class. Um, so we're still very early. So I think this will happen, but it's kind of, it takes some time to compare.
Yeah. Okay. Very interesting. You mentioned, I guess, efficiency benefits associated with using blockchain technology for these assets. Can you touch a bit on how or where these efficiency benefits come from? Is it purely transparency and yeah, I guess added transparency, or is there more to it?
Yeah, I mean, to be fair, right? Like, I mean, the number one point here, like, it's not to be underestimated, is the fact that when you have an ERC20 token or a token on chain, you can easily transfer that to someone, put it into Uniswap, put it into a Lightning protocol, and that all happens instantly, and you have basically direct settlement on chain. Like that, I think to all of our crypto people, it sounds very obvious and very simple, but if you compare it to traditional financial markets, it's really not that obvious. It may be in some markets like equities, but in, I was mentioning private credit, some parts of fixed income, it's really not normal, and it's really where already we're providing a lot of innovation and a lot of like efficiency gains. Like most financial markets, if you're buying bonds, you're settling T+2, T+3. You might need to buy, like call someone on the phone to be able to buy it. It's really not as automated as you would think it would be in the 21st century. So it's already pretty huge. Beyond that, I think it's really around how do you automate processes by writing smart contracts, right? And so for private credit specifically, and or for example, like if you look at securitizations, which is this kind of specific kind of financial product, generally what happens is there's a lot of lawyers involved, there's a lot of spreadsheets involved, and a lot of the different layers that are kind of a need to coordinate. And most of those layers could be re-implemented as smart contracts and basically code. And through that, basically automating it and making it more accessible for asset managers to use that. So I think it's about like replacing manual processes and replacing, yeah, intermediaries with code, and basically code becoming law.
Okay, got it. And how receptive have institutions and asset managers been to this code as law philosophy? Have we gotten to a point where there's like a general acceptance of added smart contract risk, or is it very difficult and long running conversations that are needed to try to, I guess, onboard institutions? Like, how are you finding this whole process?
Yeah, it's been really interesting to see what's happened in the last year, right? So many things have changed, right? We're always have facing a huge uphill battle in terms of, I mean, trying to change the entire underpinnings of the financial market is not an easy task, and it's something
Yeah.
that's going to take a long time. Let's be very clear. Like, we're not going to be successful in the next 2 years. But like the fact that BlackRock is participating, the fact that so many of these institutions are coming on chain is having this kind of like exponential effect where any institution we talk to, at the very least, they'll say, well, we know this is going to happen. It's inevitable at this point, and we want to be able to like not, we don't want to be the last. So that's really been really huge to see. Um, of course, like the speed at which some of the institutions move is going to differ, and some of these I mean, they generally have a lot of risk protections built in, a lot of regulations that apply to them. So there's some constraints that they have to work around. But almost across the board, we've seen a lot of positive momentum and a lot of excitement to start participating and really not just like build POCs that don't really create any value, but actually really become integrated into the crypto ecosystem. So actually, yeah, I'm very bullish on institutions really doing much more in this space in the next year.
Okay, got it. That's good to hear. So everyone, you heard it here first. So good news. I guess to not keep you for too long, let's and yeah, to wrap up on a nice tone. Can you talk a bit about, I guess, what the roadmap looks like for Centrifuge? I guess what are you busy with the next few months, and where do you see Centrifuge in, what it's 8 years ago since you launched now. You mentioned 2017. Where do you see Centrifuge in another 8 years?
Well, that's gonna be hard to say. I think
Yeah.
the reality is like if I've learned any lesson from the last so many years, it's that it's impossible to predict where we're going to be a few years from now. Um,
Mhm.
but to give you a more honest answer, so I mean, in the short term, what we're most excited about is launching Centrifuge V3. So Centrifuge V3 for us is the next step. It's this chain abstraction protocol for tokenization. It brings all these kind of new benefits that we didn't really have before. It's going to open up access to tokenized assets. It's going to provide a much better foundation for institutions to build on. And we're really excited about this. So I think that's going to be huge. Beyond that, like what we're looking at really integrating this Centrifuge V3 and the products built on top of it into DeFi and into crypto as much as possible, working with Yala, working with other partners. I think that's really exciting. Longer term, like if I kind of sketch out the vision, I think for us it is about like coming back to that efficiency and automation and really building on the blockchain as a foundational layer for rebuilding parts of the financial system. And the goal there really is to increase transparency, increase efficiency, and increase accessibility. And I think that's where our roots are, like I was already talking about before. And I think we really are going to be able to have provide a lot of value to our partners. So that's really where I see us coming long term. I think maybe the biggest bet I would make is that 5 years from now, we're just not going to talk about RWAs anymore. We're just going to talk about on-chain assets, and that might be
Yeah,
asset originally issued on the blockchain like Bitcoin, or it could be an asset that interacts with the real world. But the separation doesn't really make sense anymore because everything is just one thing.
got it. It's optimistic, but hopefully a very realistic prediction. I think on that note, so as to not keep you over time, to say thank you very much for joining and teaching us about RWAs today. On a finishing note, is there anything you want to share with the listeners? Anything we can look forward to in the coming weeks?
No, I mean, yeah, definitely. I would say please follow us on Twitter or on X. We are very close to launching X and we're close to launching V3, sorry. And there's a lot of other announcements coming that I think are really important steps for us. As some of you might have seen, we're currently We just announced our partnership with Maker and Spark. They just invested 200 million in our T-bill funds, and there's a lot more from that partnership coming. So there's so many things moving in the space right now, and I'm just really excited about where RWAs are, and really excited to see where we're going to be 5 years from now.
Awesome. We're at Yala, we're very excited about being close to Centrifuge and to be able to join you on this journey. So let's make it happen. So thank you so much for joining us today.
Yeah, absolutely. Thank you so much for having me, and maybe see you next time. And enjoy Dubai.
Definitely. Thank you. Okay. Speak to you soon. Thanks, everyone. Bye-bye.